Welcome back, my awesome people. I finally did it. One of the first stocks I ever bought, I finally sold it. Iron Mountain. Ticker symbol IRM. But guess what happened as soon as I sold it? Like literally within a few days of selling, I could just see money floating away from me. So if you want to avoid losing money after selling a stock, like I did, watch till the end. Now, there's a lot of uncertainty around whether or not 2023 will see a major recession as inflation remains at decade high levels despite multiple large interest rate hikes made by pretty much all the banks in the world. The worries and responses point to 2023 and 2024 being another volatile year for investors. And with this volatility and uncertainty, there will be plenty of sharp declines in the market and ready for investors just like me to scoop them up at dirt cheap prices. And that is why I sold one of my strongest stocks in my portfolio so I can enter a better opportunity somewhere else. So I sold my Iron Mountain. Now, for those that don't know, Iron Mountain is a real estate investment trust, or a REIT, that owns almost 1,500 properties in over 60 countries. The company provides document storage, document destruction, data center, and cloud services. Iron Mountain works with over 225,000 customers across the globe, helping them to organize, digitize, and safely store digital and physical assets. Even though it is as big as it is, with a market cap of over $16 billion, it actually started out as a safe and secure way to store things like art and collectibles and documents during the Cold War era of the 1950s. And over the years, Iron Mountain has grown tremendously. It now owns over 1,500 physical data center storage facilities, as well as 17 data center properties and many more to come. Every great thing has to start somewhere, right? Well, data center and physical storage demand is a necessity-based service. Many of Iron Mountain's clients need secure digital storage, or may even be required by law to store certain assets in a secure place. This helps reduce Iron Mountain's susceptibility to the effects of an economic slowdown while having lasting demand for decades to come. And because of their economic resiliency, Iron Mountain had an incredible 2022. It had achieved its highest earnings on record in the third quarter. Its revenue grew by 14% compared to 2021, while its adjusted funds from operations, or the AFFO, which is a key metric that illustrates a REIT's profitability, rose by 9%. Business remains incredibly strong in both its legacy assets, which include physical assets and services, and its data center facilities. And because companies must keep their records for several years or even indefinitely, this creates stable demand for storage services. Iron Mountain is up close to 15% in 2022 and up almost 80% since the beginning of the pandemic of March 2020. As Iron Mountain continues to build on its 1,500 plus strong data center customer base and more customers start flocking to its digital solutions, robust growth should continue. Iron Mountain currently has a 4.7% dividend yield, which is nearly triple the S&P 500 index's 1.7% yield, and with the dividend payout rate approaching, the mid 60% range, Iron Mountain will continue its dividend growth, making this a strong and stable stock for years to come. You know how the saying goes, buy companies that you know. Well, Iron Mountain was a company that I have known personally. I used to work for them. I used to not work for them obviously in the corporate offices, with the big boys, but it was a summer job back when I was in high school where I worked at one of their storage warehouses. I was stacking boxes sometimes, filling out paperwork, and since it was a high security, high confidential type of job, I learned so much about this field. But the one thing that made them overall a great company to work with, even though I was only there for one summer, was their treatment of their employees. There was a cafeteria, so we had free lunches sometimes. There was shuttle buses to the parking lot and then to the warehouse. And every month or so, there will be a games night or a games day where employees would get together and hang out and play games. It was a great positive environment, is why I chose to invest in Iron Mountain when I began my investing journey. Iron Mountain was good to me. So why did I sell? Well, my awesome friends, I decided to get out of Iron Mountain with an 80% profit. Let me repeat that one more time. I made 80% off of Iron Mountain in a very, very short amount of time. I sold my position at a share price of $55.90 while collecting a massive quarterly dividend during my few years of holding it. But after much thought and heartbreak of losing one of my starter stocks, I had to sell. There are other better investments that I personally would rather put my money into. Yes, Iron Mountain is more of a dividend income play, but while we are in a recession and other great companies are in a massive decline, I personally would rather take the profits that I got from Iron Mountain and invest in those hard-hit companies, rather than owning a stock like Iron Mountain that is hitting all-time highs and tying up my money. At this point, Iron Mountain can either enter new highs, which I think most likely will happen, or it can drop and just stay flat for a while. I mean, isn't that what we are supposed to do? Buy low and sell high, especially if it is hitting its all-time highs. Get out before it starts dropping, right? So simply put, take your profits and put your money into something that is already quite down. Sit on it for a bit and boom, take the massive profits and repeat. Iron Mountain, Coca-Cola, and AT&T were the first three companies that I bought only because I was beginning my investing journey and had little knowledge at that time of how to choose companies. So I chose companies that I did know, and thankfully these companies are actually working out. Other than AT&T, of course, which is currently going through a transition period. I am more than 40% down on it, but thankfully for its high dividend yield of over 6%, I am willing to ride out AT&T until I get some major profits in a couple of years. See, my awesome people, that is the only reason I would let a dividend stock stay in my portfolio forever if it is still growing and has a great dividend yield. Having both of these qualities is also another indicator that I incorporate into my investing strategies. Great companies that pay a great dividend and have great growth potential. And Iron Mountain will not be having great growth potential when compared to other opportunities. So that is the only reason why I pulled out. Not because the company sucks or anything like that, but because it did not fit my investing strategy anymore. So that goes to show you, my awesome people, that even though you love a company or a stock, you still need to follow your investing strategy and stick to the plan. But sometimes sticking to the plan can make you miss out on some amazing gains. Like what happened when I sold Iron Mountain. As I mentioned, I sold it at a little less than $56, but now it is currently sitting at over $60. So even though I could have gained an extra $4 per share if I held for a bit longer and made even better gains, it was definitely not what I or many other investors were thinking was going to happen. We all thought this bull run was not going to last as long as it did, and it's still continuing to run, as you can see. So to mitigate the risk, I sold because it still could have gone the other way. What if the bull market did end and we entered a bear market? Then I would have lost much of my gains. And since no one can ever time the market, an 80% gain in 3 years is a great win for me. But for those continuing to buy and hold Iron Mountain, think about it. And if you still like it, continue to do so because this company may continue to actually grow. And of course, a 6% dividend yield, you cannot say no to that. So all in all, I have no regrets selling at the price I did, because I have already made my money back and then some within a month by investing in a few different companies, which I will reveal in my next video. So subscribe and stay tuned. So Jacob Rant, now that you sold Iron Mountain, what's your next move? Well, my awesome people, I will not be jumping back into Iron Mountain at all, unless something crazy drastic happens and the price is right. But it was a great journey while it lasted, and I thank Iron Mountain and the massive profit it has provided me. For those that watch my videos to the end, I have been mentioning that I have been slowly entering the rental property market. I have been pulling out of my risky penny stocks, of course with a profit, even if it was just $100, and cleaning up my portfolio of dead stocks. I have never sold at a loss and do not plan to. So the only penny stocks I have been selling are in the green, but I still have a few in the red, which I will hold on to until it does go in the green, or I need a tax write-off for my rental properties. We are entering a new phase of society and economics, especially with the World Economic Forum taking lead. So for all my awesome people out there, start looking over your stocks diligently and start cleaning out your portfolio, because there will be countless of opportunities of investing coming up in the next few years. So I will be spending this year and using every bull run to get out of stocks and using massive bear days to average down or open new positions that have a great dividend and growth potential. And if you have any recommendations of great stocks in your portfolio that I should look at, comment below. And remember, my awesome people, just like all the information that I mentioned in my videos, assess your risk, always diversify, and please do your own due diligence, because I am just a clown on YouTube. Stay ranting.